Welcome back. Well, we'll head straight to markets. Now was risk-off sentiment that resonated in the Nigerian equities market for the two trading sessions in the week. That was last week. We did have public holidays for most of that week, but it was risk-off sentiment with the NGX all-share index down about 1.09% for the week. And we see the equity cap sitting at 57.865 trillion. And we see the banks again. The banks were hit big again last week. We'll see volume, value, deals all in the red, compared to the previous week. As expected, it was a holiday shortened week. 1.13 billion, that was volume of equities traded, valued at 28.65 billion naira. Let's look at the sectoral performance now. It was all red there. Banking, that was hit by 7.22% down. Consumer goods down about 1.33%. Even the oil and gas counter, which is normally on change, oil and gas was down about 0.28%. I will see insurance, that also follows the banking counter. Financial services down about 2.45%. Let's look at the top trades now for last week. We see Morrison Industries, that was up about 20.75%. That was the top gainers for the week. 20.75%. Wando PLC, 10.57% gain for the week, even though it was a holiday shortened. Well, let's look at the top losers now for the week. We see Access Holdings PLC, that was down big, 14.60%. So today, we're expecting inflation data for March. Analysts are forecasting a marginal rise. Joining us now is Bankole Odusonya, Chief Dealer, Polaris Bank. Great to have you on the show. Great to have you.
Good morning, Ladi.
Good morning. Yeah, so we're expecting inflation data for March today. Some are saying it might not come in hot today. What are you expecting?
Inflation is currently moved from 29.9 to 31.7. We do not expect a spike. We expect it to remain around that level. Of course, some analysts and researchers think that by now we should be seeing base effects coming. I mean, given the high prices we suffered last year at about this time, because our computation method is year on year. But if you look at food inflation, the price keeps going up, and that's the major factor in the basket that is used for computing Nigeria's CPI. The other issue at hand is the new price subsidy removal on power pricing. We do not expect an immediate impact on that because there's still a lot of discussion and engagements on that. Of course, that also does not impact the whole country. It's been said that less than 15% of the consumers will be affected, but definitely it will trickle into affecting prices, given that petrol is also unsubsidized. So cost of production basically will be affected if pricing is increased on, in some cases, about triple on power pricing, basically.
All right, what are you seeing? Let's head to the FX market now. We got some reports earlier that the Naira was trading sub 1,000, in some parts. What are you expecting for the week for the Naira against the dollar this week?
We have seen 1,100, 1,000. It's still around 1,100, 140. That was when NAFEM closed. It is very true that there are very, very serious interest from foreign portfolio investors, especially from the Middle East, probably, diversifying away from the Middle East. Over the weekend, I got calls from the Middle East where some colleagues wanted to know about today's bond auction that's coming out today and the 2027 bond instrument that is no longer on offer. It's a 3-year instrument at 19.4 coupon. It's no longer on offer. They are interested in coming to pick them up at the secondary market. So that means there's going to be more dollar inflow into the economy in exchange for Nigerian instruments that's about effective yield around 20 to 27%. So, I mean, given the prospect that Nigeria has, given the strength we've seen recently on our currency and the stability potentials, we are going to see more inflows, and then we expect more strength to the Naira. So we haven't seen 900, but it's a possibility.
Right, and definitely it's all about Israel-Iran conflict right now. Geopolitics is on the radar of most investors. at this time. Talk to me about risk off sentiment. Is that a real thing that I'm becoming to Nigeria, at this time, following geopolitics and most of the tensions we see in the Middle East?
Okay. So, like I just explained to you on Sunday, I've seen some Middle Eastern brokers and foreign portfolio investors start. They're beginning to look at Nigerian Treasury bills, 1-year instrument, and the shortest bond in the market, which is at 19.4%. So basically, it's portfolio diversification, and then, like I said, risk of the Sub-Saharan Africa bonds are looking very good. All through last week, if you get the data, you can see Nigerian Euro bonds too were also positive. That we ascribed to crude oil price exceeding $90 per barrel. As we speak, it's at 89.6. It's dropped a bit, going to end of last week due to profit taking. But if this conflict that has happened in the Middle East continues, crude oil price continues to go up, the potential of sub-Saharan markets continue to increase. Like the earlier speaker said, the Atlantic trade improves, and then, those who are diversifying portfolios simply look at Nigerian instruments and opportunities in our equities markets also. So we're expecting more to gain more from this challenge. We just have to position ourselves very well to ensure that we take advantage of this momentum and then use that to stabilize Naira, if we can't even strengthen it further, to stabilize it at this level so that most of our investors, local and foreign, can have a planning, space to plan, with a stable currency, basically.
Right, and I guess we're all hoping for peace, in the Middle East at this time, definitely. Thank you so much. It was great having your perspective. Mr. Bankole Odusanya is the chief dealer at Polaris Bank. Thank you so much. All right, so that's it for me on Business Morning. We'll track more market reactions later on Business Incorporated. That's by 1 p.m. as markets brace for Israel's reaction to the attack by Iran over the weekend. I'm Ladi Williams. It's back to the Sunrise Daily team.